The Forex market currently trades at over $4 trillion per day, dwarfing the stock and other markets. It operates 24 hours a day, 5 days a week, although there are times that are far more favourable to trade than others due to more traders being in the market, for example around the London, New York or Tokyo Open. This is the time that traders set their stalls out for the day or session. Where London leaves off, New York will continue and its traders will decide what they wish to do, and so on. London still provides the largest volumes, at around 80% of all transactions traded daily go through the London market. The Forex market provides numerous opportunities every day to traders and is growing ever more popular as time goes by, mainly because of the huge liquidity of the market, but also the fact that the Forex market lends itself very well to technical trading due to the vast number of participants that are trading. This is one of those paradoxes where the mere fact that traders are expecting things to happen actually produces the results they expect. In effect, the herd effect manipulates price. For example, a significant area of confluence or overlapping reasons as to why an area is important will often be reacted to by traders, moving price in a manner that can be traded effectively. For example, you'll see here 5 days the euro dollar was fighting with its 149 level. Now, as a very basic idea of how support and resistance works, we can draw some lines on the swings and start to see very easily and very quickly where price has been held up by support and resistance before. So let's just keep this simple, nothing complex, just to get a base idea of how support and resistance work and why traders like to use it within the market. I guess we could put one here as well. Okay, so you see price will always find its levels, and you'll find that often this has been an issue before. So you can look at something like this line here, look back, you see it's been a problem here, it's been a problem here, it's been a problem here, here, and so on. Then you can see right down here, well, what's the problem with that? Well, let's just pull out a little way and we can see again it was a problem in this zone, and I bet if we come down here we can zoom out even farther. There we go, and we have problems again there, and so on. So the point is, price moves in waves and it is very tradable. To show you this on a smaller time frame, you can see that if you use things like pivot points, we started off for the day at M2, nice 1, 2, 3 pattern, we broke, and that was it all the way up to M4. It's pretty much perfect, and then we got a nice reversal. But when we say reversal, a reversal in the direction prevailing trend of the last, at least the last week. So some drastic moves there on the euro dollar market. The market attracts many new traders. Unfortunately, only a handful succeed in becoming constantly profitable, mainly because traders have been sold a dream that they can read a book or watch a few videos and start to make money instantly. If only this were the case. The reality is very different. It takes a lot of time to learn and understand how the market functions, how it behaves and reacts to both fundamental and technical events. Traders spend a significant amount of time searching for a perfect method, system or formula, trying to find the holy grail of trading. You've heard it before, 95% success rate guaranteed, etc. What they don't tell you is that the 5% of the losers will wipe out all of the profit from the other winning trade, but that's another story. The truth is, many traders never stick with a method because as soon as they have a couple of bad trades, they are off looking for the next best thing, which quite honestly doesn't exist. A sound method is of course required and makes up around 30 to 40%, along with the correct capitalisation and a proper understanding of money management. One area where many traders struggle and often never quite breach is the psychology of trading. This accounts for the vast majority of traders who fail and incorporates many factors. Some traders can overcome this relatively quickly, others it can take months, even years, and then still never master their emotions. The aim of this site is to guide traders in the right direction and avoid the common pitfalls associated with Forex trading, and over time build a useful resource to new and intermediate traders. There is a blog which I'll post my thoughts about the market on, I'll be covering many areas regarding technical trading, from trading pivot points, Fibonacci, MACD, price action itself, and so on. If you are watching this on the site, then you'll find the pages and links on the right that will be added to over time. If you're watching on YouTube, then follow the link at the end or below in the resource box. Many traders ask, what is the best advice for starting out, or if you're still hitting a brick wall? Well, quite simply, invest in yourself. There is no point in trying to learn everything yourself for free. Yes, lots of information is online, including this site. However, you still need to see how and why things are done by a professional, how they set up the trade, how they deal with their emotions, and so on. It would be like trying to learn to be a lawyer by reading books alone. Probably not going to be the most successful strategy for you. It's no different with learning to trade. If you're learning on the cheap, then I hate to say it, your results will reflect this. The money you need to invest in educating yourself isn't just measured in the dollar cost. It's measured in the amount of time it takes to learn, times the amount of money you will lose trying, times the amount of money you should have been making, which is a significant amount. If you can't afford a course, then save up before you invest a dime into the real markets and just demo trade to get a good feel and learn as much as the terminology as you can. In fact, I would recommend that to anyone before embarking on a trading course. You can find more information on Forex trading courses on the right or below this video. Again, if you're watching on YouTube, come over to forexmarketwinners.com and all the links are there. Thanks for watching.